Hey everyone, welcome back. Just 4 months ago, I did my deep dive on WISE, and I covered in theory the risk of stablecoins to WISE's business model and how it could materialize someday. But things have moved a lot faster than expected. Circle just pulled off a successful IPO, and the signing of the Genius Act has kind of propelled stablecoins into the mainstream. So what felt like a distant or even hypothetical risk to WISE is starting to look very real. So in this video, whether you're an investor in WISE or just interested in the future of global payment system, I'm going to be breaking down what this means going forward. But before we can understand whether stablecoins are a serious threat to WISE, we need to understand the system they're both trying to fix. The system is called correspondent banking, and it's old, complex, and often misunderstood. To break it down simply, imagine a bank in Mexico and a bank in the US want to send money to one another for one of their customers. But because these banks don't have a direct connection to one another and can't simply exchange funds, they have to rely on a correspondent banking network in order to move money around. So a helpful way to think about this is imagine you're trying to take a flight from New York all the way to Dubai. Chances are you're unlikely to find a direct route. You might have to stop along the way for one or two connections. And that's exactly what correspondent banking is in a nutshell. Now, on a more technical level, this whole system relies on something called nostro and vostro accounts. Nostro meaning ours and vostro meaning yours. For this example, let's say there's Bank X in the US and Bank Y in Mexico. These two banks want to help their customers send money between dollars and pesos, but they don't just move money back and forth every day. Instead, they set up nostro and vostro accounts with each other. And this is basically a credit and debit ledger they use to track who owes what. But this is what's holding up the entire system. Just having money sitting in accounts isn't enough. You need a way for these accounts to communicate with each other, or the banks to communicate with each other. And this is where SWIFT comes in. It's basically the global messaging system for banks, and it's a secure network that lets banks talk to each other in a standardized format. So if you've ever sent an international transfer where someone's asked you for an IBAN number, chances are that's SWIFT that you've interacted with. So just in case there was any misconceptions about what SWIFT is, let's clear things up. SWIFT is not a payment system. It doesn't actually move any money. It's merely a messaging system that banks use to send messages securely. And there's no physical money that's actually being moved around. It's all based on credit and debit accounting and no actual physical cash moves. So great, we're not actually moving any money. This must mean this system is quick, cheap, and easy to use, right? Well, no, not exactly. So the system that solved many early problems for cross-border payments also created a lot of inefficiencies, particularly the need for banks to pre-fund accounts in multiple currencies across various countries. As you can imagine, this ties up billions of dollars that could otherwise be put to better use. Secondly, there's the cost of maintaining these correspondent relationships. Banks have to go through all sorts of checks: know your customer, anti-money laundering, compliance, and financial regulations in different countries. And these costs eventually get passed on to consumers with higher fees and worse exchange rates. And another thing is that this system is spread across different time zones and different working hours, meaning your transfer could potentially end up taking 1 to 5 business days to complete. So think about that for a second. In a world where we're able to send messages and emails and everything arrives in less than a second, or you can make a purchase in less than a minute, why are we waiting days for money to move between countries? So now that we've had a brief overview of the correspondent banking system, we can start to understand why these new players have emerged in order to try to fix these friction points that exist. And this is where WISE comes in, and it was founded around 2011 to solve all the pain points that SWIFT system had. So the key insight for WISE was, let's just try to bypass these intermediary banks as much as possible and just send money from one account to the other account with a direct connection. Effectively, WISE just built an internal ledger of nostro and vostro accounts where they can track both and understand who has what on what side. And it could run this parallel payment rails alongside the traditional banking system rails. And the benefits of this model are really clear. Removing the middlemen increases the speed and as well reduces the cost. And this was WISE's key competitive advantage and how they've managed to grow a very loyal customer base. And on average, WISE charges around 0.53% per transaction, and that's called their take rate. And it's far lower than the traditional banks, and as well lower than other fintechs that are operating in this space. And it's not just about cost. 65% of WISE transactions are settled within 20 seconds because they own the entire network, so to speak. But there are some inherent drawbacks in the actual model that WISE has built. WISE needs to hold funds in both sending and receiving countries. That means tying up a large amount of working capital to ensure that there's always liquidity available. However, you could take a look at this the other way. If WISE becomes the main liquidity provider for international transfers, that becomes its competitive advantage and also leads it to have very strong scale economies and very strong network effects. So what about stablecoins? Well, they represent a completely fundamentally different way of cross-border payments. Instead of trying to fix the old system, it's built on something from the ground up. I won't go too deep into the technical side of things because that's not where our focus is, but what matters is this innovation has ways that it could change fundamentally how we move money across borders. The appetite as well for stablecoins is growing at rapid speed, and monthly transaction volume is reaching around 800 billion consistently month on month. And just to put it into perspective, WISE handles around $200 billion of cross-border volume, not monthly, annually. And you're probably not surprised to see that there's going to be a whole host of players trying to enter this highly competitive space. I know I said we're not going to go too technical, but I think it's important to understand or underline this important point. At their core, stablecoins are digital assets designed to maintain a fixed value relative to a reference currency. Most commonly, it's the US dollar. And the two largest by market cap are USDT, Tether, and then you also have USDC, which is issued by Circle. And both are pegged one-to-one to the dollar, meaning they're backed by reserves like cash or short-term treasuries. And this is exactly what makes them special. In contrast to cryptocurrencies, which are very volatile, stablecoins hold on to their peg as they're backed by dollar-denominated assets, and therefore could be used as a medium of exchange. And one of the biggest advantages of stablecoins is going to be cost. There are many different blockchains out there. Think of these as different ledgers that are a record of transfers. On the most efficient ones, it can cost as low as 1 cent to transfer across the network. And if you compare that to traditional banking system, which can cost $30, it's a no-brainer. But it's not quite that simple. Yes, in theory, it could be as low as 1 cent, but in practice, we're going to see why that is actually not the case. And just like WISE, stablecoins can improve the speed of cross-border payments. However, they are not limited by banking hours, days of the week. They are operating 24/7, day in, day out. And that is a huge advantage as well for people to get money instantly whenever they need it. And beyond these core advantages that we're used to, there's one advantage that stablecoins possess over the traditional fiat government issued currencies, which is programmability. So for example, smart contracts can automatically hold funds in escrow until conditions are met, split payments across multiple recipients, or execute recurring transfers, all without manual intervention. And you can see this list. There's a whole host of other things you can do with these programmable stablecoins, from Amazon all the way to Walmart. A lot of people are exploring this space because of the potential unlock that they could gain. But maybe the most disruptive thing about stablecoins that trumps everything else I just said is how stablecoins manage liquidity. Remember how we said in Nostro and Vostro accounts, everything needs to be pre-funded and making sure we have enough working capital? In the case of cryptocurrencies or stablecoins, you don't need that. Stablecoins flips the script on its head. Don't take it from me, just listen to what Circle's CTO had to say, and I'm going to quote him word for word here. You don't have to estimate liquidity on the other side. You just do the transaction because party A in country A is sharing a common ledger with party B in country B. So that's a game changer. And the founder of HighGlobe, which is an up-and-coming fintech in the US, mentions that trillions of dollars that are currently tied up pre-funding accounts around the world are going to be freed up in the next 5 years. And that level of capital efficiency could really call into question the model of pre-funded Nostro and Vostro accounts. As you can see, stablecoins operate on demand with real-time liquidity, and the liquidity requirements are very low and very low working capital. So if stablecoins are cheaper, faster, programmable, borderless, and more capital efficient, why aren't we all using them yet? Why do WISE and SWIFT still exist? Well, the answer is pretty simple. For any payment system to really succeed, it needs 3 things. It needs to be low cost, it needs to be fast, but it also, most importantly, needs to be trustworthy. And historically, trust has been the weak link. In 2022, we had the collapse of Terra USD. Now, that was working on a more algorithmic stablecoin compared to the traditional versions we're used to with Circle and Tether potentially. However, Circle itself suffered from a depegging event during the Silicon Valley Bank crisis, and the price of USDC momentarily reached 88 cents. And another thing that often gets overlooked with these stablecoin transactions is that they are final. There's no undo button. There's no customer support if something goes wrong. And there's more. Remember when I mentioned the cost of sending stablecoins could be as low as 1 cent? Well, the problem isn't the actual transfer of stablecoin to stablecoin, and that's where the transaction fee is 1 cent usually. The problem lies in the initial, what we call on-ramping and off-ramping. The initial conversion from the local currency to the stablecoin, USDC potentially, let's call it, and the conversion once again from USDC to the local currency on the other end, the off-ramp. These transactions still carry substantial costs associated with them, And more often than not, they end up being higher than the costs you may expect with other companies or fintechs like WISE. Another thing to add on to the list is the regulatory changes. Now, a lot of people have been praising the Genius Act as a momentous occasion for stablecoins and an inflection point for the crypto generation. However, it doesn't come without any obstacles or any downsides. It has a lot of regulations and compliance requirements for these companies, which eventually will show up as a cost to the consumer because they will push up their actual administrative costs. And therefore, this potentially leads to higher on-ramp and off-ramp costs down the line. So now that we've covered all these advantages and disadvantages of each type of payment method, let's try to answer the question of whether or not stablecoins are a threat or an opportunity for WISE. So it really depends how WISE views stablecoins, in my opinion. If they view stablecoins as a direct threat to their business model, then I think they would be risking a lot, as opposed to an additional layer that can operate with its existing infrastructure. Then stablecoins could actually complement, not compete with the WISE model. There are signs that WISE is leaving the door open for this. And historically, CEO Crystal Carmen has been a little bit frustrated and a bit dismissive whenever asked about stablecoins. And that's the case back in late 2024, whenever an analyst asked him about this. And this is what he had to say. I can't. Every time there's a crypto or stablecoin question, I think our opinion hasn't changed. That if we see something that enables the movement of funds faster, cheaper, and more conveniently, we will totally consider that. So that stance hasn't changed. More recently, his tone has softened, hinting that there's openness to embracing this technology potentially. He went on to say, it's interesting to watch what the use cases for stablecoins might become. As long as local currencies are still in use, it's hard to see these technologies competing with the infrastructure we've built. But I kind of reserve the opinion there. That last line, I reserve the opinion, is subtle, but it hints that they're keeping their options open. And if you've been watching all the way through, there's one more thing I want to share with you. You might have heard that WISE is seeking to list in the US to gain more liquidity and access to public markets. This is actually a side story, in my opinion. The real story is that WISE has applied for a US trust charter alongside Circle and Ripple. And this is very exciting, in my opinion, because at its core, this charter improves WISE's primary business model, which is to make payments cheaper, faster, and more efficient. If WISE gets approved for this charter, it won't need to rely on any middlemen and intermediary banks in the US. It would have direct access to the Federal Reserve payment rails and the ACH network, if you're familiar with that in the US. So what does that mean? Obviously cheaper prices. Now WISE already has multiple direct connections with 6 or 8 central banks around the world. If it gains the US, which would be number 9, it would be a huge driver of costs downwards in terms of their take rate. And you can see that 46% of their transaction volumes already through these direct connections. These direct connections also reduce the working capital and liquidity requirements for WISE, and it actually moves them from this pre-funded nostro-vostro model to more of a real-time gross settlement. And here's the last bonus thing I want to give you. Now, granted, I am stretching a little bit and extrapolating, but this trust charter also positions WISE perfectly for a stablecoin transition. Why? Because under the Genius Act, a trust charter can enable a non-bank entity to hold and safeguard stablecoins under federal regulation, to issue their own stablecoins without becoming a traditional bank, and use stablecoins behind the scenes to move money faster, cheaper, 24/7. Now, to be clear, WISE has not made any intent in their application for stablecoin use. However, they could always amend this in the future. But this charter does give them the optionality to do this. So for me, the question isn't whether or not they're going to adopt stablecoins, it's a matter of when. And I really do hope that they consider it sooner rather than later. If you enjoyed this video, please drop me a comment letting me know what you think about the video. It's a different format from my normal deep dives that I've done. And of course, you can watch my deep dive on WISE if you haven't already. And please let me know if there's anything else you would want me to cover. And hopefully I'll see you in the next video.